Hey, 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 everybody. It is Thursday. Oh, man, it is a rainy Thursday, but it is still Thursday, and we're still bringing the heat because you know what that means. That's right. It is episode 90 of The Real Deal Pod with Allister and Geoff. It is me, Allister Carrington, your trusted realtor, alongside your and my trusted realtor, Geoff. Trusted mortgage broker. Whew, sorry, Geoff, you want to switch jobs? Trusted mortgage broker, Geoff Lee. Geoff, buddy, how you doing, buddy? How you doing, man?
Well, let me answer your first question. No, I don't want to switch jobs. I have a whole respect for realtors. And you guys do a lot of work in odd hours that really can affect, homes, like your family. So no, I do not want to be a realtor. I like being home in the evenings. I like doing my thing on the weekends. But again, yeah, so Alistair, you be the realtor. I'm going to be the mortgage broker.
All right.
We can do a swap one day, like just like the job
Job
swap
swap?
just for a day,
Okay.
and then you know what, I will even respect more than what realtors do. So on the other side, yeah, it's kind of rainy out there. We've been really busy, which has been great. Heading up to Whistler for a couple days to burn some of my passes. And yeah, it feels like you're always going 100 miles per hour. That's for sure.
Look at you, man. That's fantastic. You sound busy and nice. Nice little balance that you got going in there. I like that you're getting up to Whistler to burn some of those passes.
Well, the
Neat.
problem with balance is that balance is good, but a lot of balance is unbalanced because what you're stepping away from in a short time, you get it's always waiting for you when you get back.
Right? Yeah, I know. I know. For me, there's no balance. I'm out everywhere. I'm out just traveling basically the lower mainline and the Fraser Valley over the weekend, and I'm getting killed with the gas cost, man.
Yeah.
This war is driving me crazy. My wife won't let me buy an electric car because she calls him a silent killer. It's I'm caught between a rock and a hard place, man. Something's got to give.
Just tell her to get one of those beeping machines when the car backs up,
Right.
right? And she can even probably put it on when the car is going forward. Just make it, so if they're too silent or the silent killer, just put a bell on it or something. Like make it happen.
I'm with you, man. I'm with you. But this gas price, and they did a survey and of Canadians about the gas prices and who's the most upset. And they found out that the people that they're complaining the most are the people that paid the least. My good old province of Winnipeg, Manitoba, led the way with people complaining the most. Their gas used to be, what was it? Their gas used to be $1.35. Now it's up to like $1.60, 65, or 85 or something like that. And I just keep saying, man, come out here and start paying over $2 a freaking $2 a liter. It's crazy.
I'm so old, Alistair. I can remember when gas was 35 cents,
Yeah.
and I can remember when it was $2 and 35 cents. So you know what? I've been from the mountain and back. So you know what? I'm a half full kind of guy. Yeah, it's $2. Actually, just maybe under two, but I think just less than 10 months ago was at 235. So
That's true. That's true. That's true. But awesome, man. Well, I know we got a lot to get into today, so let's kick it. And let's kick it off with the hottest segment in podcast right now, and that is
did you
Did
know?
you
that's
know?
right, baby. Did you know? Geoff, did you know is going to be different today? I want to have a quick discussion because did you know it actually all started with an article that I was reading earlier this week. And it was, Geoff, did you know that a recent survey from RBC shows that 67% of Canadians still want to own a home, which is up from last year,
Mhm.
and nearly one in three are planning to make a move within the next 2 years.
Oh, 2 years.
2 years.
I'm
Yes.
surprised that isn't higher. Like 67% is not, to me, is like a C plus, right? Like
So
it's not very many people.
So that was what my frustration is. And so that was what they like when I started off this week. I was like, oh, that's going to be my did you know? And then that's the question that I had. I was like, that was so puzzling that it was so low. So I started researching more things and then saying, oh, that's a great did you know? And that's a great did you know? And the last did you know that I was gonna land on for today was talking about how prices have gone backwards from now to 2022. We have lost, but Canada itself, which has led the 63 academic countries, I believe that they rated them through, rated us the number one price decline in our housing market. We declined 18 to 19% in our value of homes between now and 2022.
Yeah, and we're talking on a worldwide front.
Worldwide,
Yeah.
Canada was number one, which got me to dig further. And I got into another stat where and this is adjusted for inflation and all that sort of good stuff, right? When you're looking at all the housing prices, right? And when you look at the price of homes versus 2017, Canada's or Vancouver, I beg your pardon, is right back to what our prices would have been in 2017. So, Geoff, why don't we talk about things being like things cheaper now,
Yeah.
right? To like if it's 67% just seems such a low aspirational number
Yeah.
for home ownership.
And to even go a little bit deeper on that, our governments, provincially and federally, have set out so many guidelines to entice first-time home buyers and home
Yeah,
ownership. And and again, we've talked about this. It's almost done the reverse of what it was designed to do, right? We
yeah,
have a slow market. Again, from what I'm hearing from you is like prices have dropped considerably since 2022. We're
yeah.
we're in the prices of 2017, and we have the second lowest rate environment that we've seen. So why is only 67% of Canadians want to be in home ownership? Like to me, it should be 100%. And again, as I'm even talking about this even more, and if you're a homeowner, what does that do to your overall net worth? And we always re go back to that CMHC study. So again, like, how are we going to get 33% of these 67% of Canadians that do and don't want to buy a home? And again, I think it's just keep on talking about it because the media is doing the complete opposite
Well,
of,
and so go ahead, go ahead.
yeah, the media is doing the complete opposite of sending this message, right? Because I did not know.
Right. And so that's what I was gonna say. Like, I know people don't like out there, they don't wanna hear realtors speak a lot of the time. And I say that tongue in cheek because I get it. Like in every industry there's a bad, there's the ugly. You've got all the spectrum out there. So you don't know who to trust, who's speaking, how knowledgeable, and how educated they are. So you're afraid of a realtor. But you should feel the same way about media. And if you don't want to, if people are going to be more in tuned to listening to the media, then why isn't the media speaking of these things more? You know what I mean? If we're going to put all of our trust in the media into making the decision, because the other part of that article, just so you know, is that one of the things that buyers, especially first-time buyers, those people that we're going to buy within the next 2 years,
Mhm.
it's they're looking to buy not because they can't. They have the money. What the study showed was they were afraid of making a bad decision, and that's why they haven't bought.
Well,
So,
again, sorry, let me jump in for a second. This
yeah,
goes back to a couple of our pods ago as far as what are the three main reasons that our market is where it's at.
right.
And It's the unknown. It's the unknown of the future, which again just nails it on the head of what you're saying.
Right. And so if the professionals, as in the mortgage brokers and the realtors, and I won't speak for your profession, I'll speak for mine. If you don't want to listen to the realtor, who's the professional, right? Who's there to guide you and aid you and make sure, you have the happiest experience that you possibly can. If they're not the person that you're going to trust, and it's going to be the media who doesn't do the job, who doesn't sell homes, who doesn't help people buy homes and all that sort of good stuff. But if it's going to be the media that you trust, why isn't the media then wanting to help, like wanting to drive and get the information out that would actually help people make a good choice right now in building their net worth and not having to do it later when they can't afford anything again? Because then back in 2022, apparently we couldn't afford anything.
Yeah. It's just another great conversation piece when we're talking to people and giving them knowledge is that like, look, like prices are down 15%, correct me if I'm wrong, since 2022. Not great if you're a homeowner and your equity and all that, I get it. But the reality of it is, in 3, 4, 5 more years, it's gonna rebound. Our
Yes.
prices are, back from 2017. We've talked about this as the second slowest market that our country has seen, right? Since 1980, I think is what you shared with me.
1980.
Our rates are the second lowest that the country has seen since pre-COVID, and everybody in pre-COVID was willing to buy like it was Black Friday and Boxing Day, but again, and also at those astronomical prices, right? Um, and again, it just goes back to what you just said is why are people hesitant? And people are hesitant not because they can't, it's because they won't,
Right.
because they're a little bit unsure as far as the future.
Yeah, it's wild. So, I just think that we need to start finding ways to tell stories to help people become more confident
Yeah.
in our market. We need to stop, and I'm talking to the media out there, to stop with the doom and gloom reporting and really, you know, really focus on education. The way the news, as when I was young, I didn't want to watch the news with my dad at 6 p.m. And do you know why I didn't want to watch the news with my dad at 6 p.m.? Because I had no desire to be educated. That to me is what the news used to be. Is it was like, oh my goodness, I got to sit down and have another lecture by teachers for another hour of my life, right? And I guess maybe the news has gotten away from education, but we really need to get back into that space of educating people so that again we can build up our net worth and again build trust in people so that you can feel like you have those people. And like Jeff and I always talk about, our power teams, or your power team, sorry, is having those people within your power team that you can trust so that you make these informed decisions and take advantages of markets that are going on right now when supposedly they're slow. Well, they're slow. It's not supposedly, they are slow in a lot of respects when they shouldn't be slow is what I mean.
Yeah.
This is the time where it should be COVID. It should be Boxing Day.
Yeah, the other issue I see too in today's environment, you can have an opinion, be it right, be it wrong, be it indifferent, and you're always going to find someone that's going to agree with you,
Yeah,
right?
that's true. Yeah.
So I go back to, I go back and I talk to my friends and my developer friends all the time, like what, because they're really taking it. Like if anybody's taking it right now, as far as, big losses, are developers, be it
Oh yeah.
big, medium, or small.
Hmm.
Development is taking it big time.
Hmm.
And we have these same conversations like what is going on? Like why are people not buying? There's no reason why people should not be buying. And also let's come back to it like that if and it was said this last week or a couple of weeks back is if you got a house that's priced right, looks good, it's going to sell,
Yeah.
right? But you take a look at these developers and they're sitting on massive amounts of inventory. And they're having that same question is like, why is this market not moving? And I feel it's because your person that's to the left of you, to the right of you, the person that's in front of you, the person that's behind you, they're all sending that same message of hesitation and fear, right? And
Yeah.
it's not that they don't have the ability to do so. In fact, from what you're saying, that's not it at all.
Nope.
It's the fear of moving forward. And again, how is things going to change? You know how it is, in my opinion? It's like an avalanche. One snowflake at a time, and it gets momentum. And it
Yeah.
gets momentum. So that person to the left is now going to start to buy. That person to your left, your right, is now going to start to move forward. And all of a sudden, guess what happens? We start moving in the right direction, right? So
Yeah.
when is that
But
time? Who knows? I don't know.
so do you think, and because we got to get into it, I know we got to get into to your stuff right away. So do you think, because we of course had the rate announcement, and they did what we thought, but not for the reasons that I when I was reading it, not for the reasons that I thought, right? They basically said what's going on with Trump and his war and stuff like that, and the uncertainty and instability. That's the reason that they were pausing the rates. That made it sound to me like had that not happened, they would have dropped it. What are your thoughts?
I try to keep it simple. And at the end of the day, if you take a look at our inflation rate is like at 1.8%, which is the lowest it's been since forever and a day,
Yeah,
right? And and when your economy is basically not like in a depression or a recession and they're starting to and they need to stimulate buying, this is when you see the rates lower because again, how to get out of a recession, they need to lower the rate, which stimulates the buying, which basically gets the economy going,
yeah,
right?
oil's the wheel.
And it's also keeping our inflation to where it needs to be. The reason why our rates were rising so much on the variable side or the overnight lending rate is because they were trying to get inflation back to where it needed to be, which it now is. In fact,
Yeah.
it's below
Well,
to where it needs to be. We're in a very, very good situation.
yeah,
So again, I think the Bank of Canada is also very hesitant on making too many moves without really thinking about what is the possibility of what the next 12 months or 6 months is going to look like. You take a look at unemployment stats. I think our unemployment stats were actually quite high,
yeah,
right? And
yeah,
that has a big impact on the decision if the overnight lending rate is going to go up or down.
yeah,
But the consensus is really even moving forward to our next rate announcement, and even moving forward to the remainder of this year, is that our overnight lending rate, these Bank of Canada announcements, don't expect much. Don't expect it to go up. Don't expect it to go down. I think we're kind of where we need to be. But again, that being said, that doesn't mean lenders aren't going to give a bigger discount off of that prime rate. That doesn't necessarily mean that it should stop people from buying because, again, we don't really hear a lot of our clients anymore saying, "Hey, I'm waiting for the next rate announcement,"
right.
right?
Yeah,
We're
yeah,
not seeing that or we're not hearing that because, again, if you take a look at variable rates, depending on your down payment, is anywhere from 3.7 to 4.3%, right? Like, when's the last time that we saw a rate, in that mid threes?
no, I know.
So it goes back again to why are people not buying? It shouldn't be the excuse of the rates are too high. It shouldn't be the excuse that the market is too high. The excuse of the day now is we don't know what our next 12 months are going to look like. So we're going to wait to see what's going to happen with this war. We're going to wait
Yeah,
to see what's going on in the US. We're going to wait to see what next thing that Donald Trump is going to do, right?
yeah.
But again, you're going to be waiting forever because once that all kind of irons itself out, you're going to be waiting for something else.
I was
It's how the
something
world
else is
works.
going to come up. Something else is going to happen.
Yeah. But what is it? It seems to be different every 6 months. And I'm no world politician, but again, a year and a half ago, and I don't follow American politics, I don't follow politics, but a year and a half ago, if you're to ask the general public, do you think we're going to be in war with Iran? Like people would tell you that you're crazy,
Crazy. Yeah, exactly.
right?
Yeah.
But maybe people that have a little bit more on thumb on the pulse would tell you different and say, well, actually, that was just waiting to happen. I don't know. But the general public, again, a year and a half ago, would not say that the US and Iran were going to be in a war. The general public, a year and a half ago, wasn't going to say that Donald Trump was going to impose all these tariffs.
Yeah.
6 years ago, the general public wasn't going to say a virus was going to turn the world upside down, right? So again, there's always going to be something.
Yeah.
And
Yeah.
today is just the new thing.
Yeah. I'm with it. Yeah. Yeah. Well, man, that was good. That was good. That was good. That was a lot of stuff.
Well, this is usually we segue really nicely into what I want to talk about,
Yeah, this is
but this is not going anywhere near there. So, we almost have to hit the refresh.
uh
And what I wanted to talk about was home equity. And to your point and to your did you know, like what we're seeing as homeowners is a decrease in our home equity,
sure.
from what we've seen since 2022 with a 15% drop in the home that you own. But the reality of it is that many of us still have equity within their homes. In fact, I'm going to say most of all of us have equity within our homes.
Sure.
So the question sometimes is, well, how do I access that equity, right? And I thought it was a really good time to say, hey, let's kind of bring it back onto how you're going to access equity. And people access equity for a various amount of reasons, which we'll jump into. But the first thing that we need to understand as homeowners is that if your place is worth $1 million, Alistair,
Yes.
based on today's Bank of Canada guidelines, we're allowed to access 80% of that equity of your home. So again, if you own a home for $1 million
Hmm.
and you're able to access 80% of it, that means you're able to access $800,000 of the home that is worth $1 million, right?
Right.
Some of us believe that, hey, if my home is worth $1 million, I should be able to access $1 million. And that is not the case. You can
Not
only
true.
access 80% of what the value of your home is. So again, if your home is worth 100 or $1 million, you're able to access $800,000 of the equity of it. But say you have a $500,000 mortgage that you currently have. Now that means you're only able to tap into $300,000 of equity. And again, a lot of times that's going to come in forms of a line of credit. That could come in forms of a mortgage. And again, I'll explain a little bit more of that. But what I really wanted people to understand is that, again, you only are able to access 80% of it, not 100%. The other thing that's really, really important to understand is that when you're accessing that equity, you also have to requalify for it, right? So we have many conversations throughout the week when people are asking these questions like, hey, my house is worth $1 million. I got a mortgage that's 500,000. I want to access this equity of 500 grand. And well, then we wire them back here a little bit. We say, well, it's only 80%. So it's only 800 grand. If you owe 500,000, you can have your hands on 300,000. And then it's like, okay, let's do it. I'm like, okay, great. Well, what do you do for income? Oh, what do you mean? Well, you need to qualify. You actually need to re-qualify for everything if you want to access the equity. It's not an ownership right that you're just going to get it. Oh, okay, okay. Well, I make X. Okay, well, what are your debts? Well, what do you mean? Well, again, how much is your income? What are your debts? This is going to determine how much you're going to be able to qualify. And some of us can do exactly what we want
Yeah.
and access that equity. Some of us, we can't.
Yeah.
And it's all based on what your income is and what your debt load is going to determine how much you're going to be able to borrow on the value of your home, right?
Right. Yeah.
So let's just talk best case scenario. and you're able to access this $300,000 that is available to you. People will often wonder, like, how is that going to come to me? I just actually did a file. This particular lady was able to get $168,000 of her equity, which was much less than 80% of the value of the home, but this is what she qualified for.
Four. Sure.
And the question was, well, how do I get it? And it was like, when you're doing things every day, 365 days in the year, you're like, well, what do you mean? How do you get it?
Yeah,
Well,
what do you mean? How do
this
you
is
get
how,
it?
but it was, it put the light bulb back in my mind is like, what is normal to me is not normal to the general public when they're trying to access the equity of their home. So I had to remind myself, Geoff, you do this every day. This lady does this once every 5 years, maybe not even that. So again, I had to explain, like, look, the best way to, number one, what do you want to use this money for? Well, I just want to use it for reinvestment. I just want to have it there if I need it. I just want to have a backup plan. So the best thing for her was to put it into a home equity line of credit,
Right.
right? What we call those HELOCs,
HELOCs.
right?
HELOCs. Yeah.
And why do I want? Well, what's the rate on it? Is always the question back. Well, typically it's prime or prime plus a half, and so as of today, that's anywhere from 4.45 to 4.95%. And it's like, whoa, like that rate is too high. And I'm like, well, this is what a line of credit looks like. It doesn't matter if you go from bank A to bank Z or credit union A to credit union Z. That is really the rate of a line of credit. And the larger the line of credit, the lower the rate. And the lower the line of credit, the higher the rate. But typically your rates are anywhere from 4.45 prime to prime plus a half, right? The one thing that people need to understand is that if you set up this $168,000 in a line of credit, if you don't use it, do you have to pay for it?
No.
You don't.
No.
The only time that you have to pay for any money that's in a line of credit is if you use it,
Use it. That's yeah.
right?
Yeah. Yeah.
So the other question that we can ask a lot of times is, well, what do you want to use this money for? Well, I want to do home renovations, or I want to get rid of some of my consumer debt. Well, if that is the case, then we blend that equity into the mortgage, and then basically you have access to that money right away in order to pay off that consumer debt, in order to do that home renovation, in order to do whatever you want to do. But guess what, Alistair? As soon as you're starting to use that money, do
Yeah.
you need to, are you
You're
paying
paying
on it?
for it. You're
Right.
paying for it.
Now, the difference is with a mortgage, that's always going to be a lower rate than your line of credit. But the big thing that people need to understand is that if you're using it and it's becoming part of your mortgage, you're paying on it right away,
Yeah.
right?
Yeah.
The other way that we get lines of credit or access the equity of the home, because sometimes people don't qualify. And we've talked
Yeah.
about this before. Maybe your income isn't where it needs to be. Maybe your credit isn't where it needs to be. Uh, Maybe there's a life event that's going on that basically is not going to be favorable with a bank or a credit union. So but you have equity within the home. And again, let's go back to our other case study where that home is worth $1 million. They have $500,000 of a mortgage on it. They're allowed 80% of the value of the home, so they have the ability to tap into that 300,000 if they're able to do so, but they're not qualifying with a bank or a credit union. So how do they get that 300 grand? And a lot of times this is when we use private lenders, and a private lender will come in and say, "Hey, we're going to do a second mortgage on it. The rate is going to be, there's going to be a premium to the rate. There's going to be applicable fees, but we're not really concerned about how you're going to qualify for it. We're not really concerned about what your credit is looking like. We are concerned about how you're going to pay us back, but because you're not going to be qualifying with a bank or a credit union, we're going to put a second mortgage on it. The rate is going to be a premium rate, and there's going to be fees on it. And that's another way that many of us will get access to the equity of home by utilizing private lenders,
Yeah.
right?
Yeah.
So again, Alistair, why do people want to use the equity of their home?
Well, I can think of a way, and it's not, and please, it's not helping your Uncle Steve with his his chicken feed shack up in Squamish, but but it's you want to invest in something, just not chicken feed shacks in Squamish.
Yeah, well, unless it's a chicken farm. Those
Okay,
things
chicken
might
farm's
be a
okay,
good
not a
those
chicken
might be a
feed
good
shack,
investment.
not a chicken feed shack.
But exactly. So why do people tap into the equity of their home,
But they
right?
do want to they do want home investments, and I know as well one of the biggest in my industry and the clients that I deal with, a lot of the times because they don't want to wait to give their kids their inheritance, they do it in order to help their kids with their down payment of their first property or whatnot.
Yeah.
Yeah,
Early inheritance planning,
early inheritance money. Yeah,
right?
yeah, yeah,
The other one that we see a lot is, and we've talked about this, and it was called the cash flow leak, is when people have consumer debt, right?
sure. Hmm.
We see a lot of that in accessing the equity of the home to pay off high interest consumer debt. We see a lot of it when people are renovating their home. We're working with a lady right now, and she understands that her windows may need to be replaced at some point because the home is getting older, but
Yeah,
she just doesn't want to quite do it yet. So again, we'll get access to her equity. We'll put that within a line of credit. So when she wants to do those windows, that money is there for her to use, right? Um,
I actually just not to interrupt. Sorry, but I had a client that had to do that recently because of actually strata special levy that
yeah.
that just came up.
Yeah, and again, back to another pod that we did, anyone who is a strata owner that owns a condo or a townhouse, I think the statistic you were saying that the average strata owner is going to be paying roughly around $8,000 of
Eight
levies at some point,
eight
right?
grand this year is the guess. That 8 grand, yeah,
And again, a lot of times, like, where are you going to get that 8 grand? And that could be in forms of a line of credit that has been set up in the past or a line of credit that needs to be set up in the now.
hmm
Um, to your chicken farmer, a lot of people will do investment
yeah,
opportunities. Again, uh, there's a lot of people, and we've talked about where our real estate market is right now with 2017 prices. Now is a great time to purchase rental properties. We're probably now back into a time where you actually, what that mortgage is with today's prices to where the rate is at as of today, as far as what that overall monthly mortgage payment and condo fees are going to look like, a lot of people are now at a break-even point if they're
yeah.
purchasing investment properties, whereas they were in a negative before, right?
Mhm.
I believe we're now in an environment that if people are using their lines of credit as forms of down payment to purchase investment properties, you're now at a break-even point. And more importantly, and this will be actually another great pod, you have a future equity position. So this is an ideal
Yeah,
environment for real estate investors. But again, how do they get the money for their down payment?
yeah,
And again, it's in the forms of a line of credit,
yeah,
right?
yeah,
To your point, again, a lot of people are helping family with a down payment or early inheritance planning.
yeah.
And again, we've talked about the average gifted down payment from family to their kids is $300,000. That was a study done by CMHC. And again, a lot of times people will do equity lines of credit to use creative investment tools to increase their overall net worth, like the Smith maneuver, right?
Right.
Is
Yes.
one of them. And we're starting to hear a little bit more noise about the Smith maneuver and to keen, and again, another great pod, but really it's simply using your line of credit for reinvestment and then basically paying down the mortgage, your line of credit increases, you use that line of credit for reinvestment, and everything becomes a tax strategy, right? So again, people are using that line of credit to create avenues of increasing that net worth through investment.
Yeah. Yeah.
Alistair, what are you not going to use your line of credit for?
Well, okay, all right. So I've heard a couple times, I've heard, don't take like vacations or buy Porsches. I don't have enough equity in my home to buy a Porsche, but but don't be like going off and jet setting around like you're a movie star and stuff like that. That's kind of a waste.
Yeah. Yeah. So yeah, luxury purchase,
Yeah.
risky investments. Like how many times have you heard a buddy like, oh,
That's
do
Uncle Fred's
I got a stock for
chicken feed
you?
shack.
Right. Just spoke with a client that went into a risky investment and now owes CRA $70,000. Right.
Ah,
I had another client that lost a $500,000 in a crypto Ponzi scheme.
oh,
Um, that basically accessed the equity of their home in order to do that investment.
no.
So again, what you don't want to access that equity for is vacations or lifestyle spending, keeping up with the Joneses.
Yeah,
That's probably one of the worst things, neighbor A got a Corvette. I want to get a Corvette, right?
yeah,
You don't want to create short-term consumer debt because that again just gets you into that craziness. And the reality of it is that if you're using your line of credit for depreciating assets, banks love that because these are also called never-ending loans, meaning that most people who have a line of credit that are using their line of credit for vacations or purchase like luxury purchases or silly things like that, they typically are never paying off their line of credit,
yeah,
right?
yeah,
And again, to keep it really, really simple, you're using your line of credit for appreciating assets and reinvestment. You're not using your line of credit for depreciating assets and just basically on silly things.
yeah,
Now, the couple of things to understand, and this is where we're going to kind of wrap it up here, is that there is also a cost to do a line of credit. There's going to be an appraisal cost. There's going to be a legal cost, and usually the combination of two is roughly around $2,000. A lot of times people will set up their line of credit when their mortgage is renewing or when they're refinancing, right?
right.
Very few people that we have worked with will give us a call through the broker channel and say, "Hey, Geoff, I have a Scotia mortgage. I just want to do a $100,000 line of credit." We're able to do that. We just don't see that often. I just find that most people will do that at the branch, but that's another time when people can do it. But the reality of it is, and where I'm going with this, is that there is also a cost to do it. You're going to have a legal cost, you're going to have an appraisal cost, and typically it's going to cost you around 2 grand to do, right? So that is lines of credit. And I know there's a lot of information in there and
No, man. There's a lot, but it's good.
it's good. I love lines of credit. Like
Yeah,
I'm a huge advocate in leveraging. I'm a huge
yeah,
advocate if you leverage your home equity and appreciating assets,
yes,
and you have a great power team that's around you, and depending on what that looks like or what that is, and that could be reinvestment into the stock market, that could be reinvestment into investment properties, that could be reinvestment into businesses. I'm just a huge fan of that because I've seen countless people who do it the right way and they're not making 6-digit salaries, right, or high 6-digit salaries. They are just using the art of leveraging, and by doing that, that is how they're increasing their overall net worth.
yeah, I agree, and that's what I was going to say. The biggest thing is again that the team you have around you and trusting that team. And I think that's the biggest takeaway throughout all of this whole pod today is almost just how important your team is again that you have around you. I mean, we've learned that the people that are looking to buy in Canada right now, it's not a matter they're not buying because they can't afford it or they need to save stuff up. They're not buying right now because they're afraid of making the wrong decision. They don't have the right power team around them, right? And it's the same thing in this. You don't be, leveraging the equity in your home and giving it to your Uncle Fred and his chicken feed shack in Squamish because he tells you it's going to be really good and it's going to make billions of dollars. Because you know what? It's probably not.
Do you
And you're
have
going
an
to lose your
Uncle
home.
Fred?
Right? No, listen, he owes me a couple bucks, you know. But no, but you know, you need to know, you need to have those people that are going to be there to help you do this correctly. But when you have those people in your corner to help you do this correctly, the windfall, just you know, your life, just how life changing it is it's huge.
Yeah,
It's huge.
it
Yeah.
is.
Yeah. Amazing. Well, that's a lot, man. I think we did a good job today. We hope you feel the same. Again, Jeff and I are always trying to do what we can do to bring you the most valuable content you can possibly have. Oof, get out there. It's supposed to continue to rain all week. Rest of the week. Just get out in there and enjoy it if you can. Have an amazing weekend. Can't wait for you guys all to be back with us next week. But most importantly, in the meantime, stay empowered, stay informed, and Jeff,
Stay tuned.
that's right, baby. Stay tuned. Peace out.